For people who are struggling with debt, one of the things that they are concerned about, and one of the reasons why a lot of times they don't want to file bankruptcy, is they're afraid that they're not going to be able to finance an automobile after they file. So in today's episode, we are going to play an interview for you that I recently did with David Roberts. David is the president of a business called Automotive Fresh Start Center. What Automotive Fresh Start Center does is it helps people who have filed bankruptcy finance vehicles following their bankruptcy. It's a really great service, and I'm excited to share the information that David has with you. But David's been in the automobile business for a very long time, so I also asked him about financing for people that aren't necessarily filing bankruptcy. So there's a lot of great information in this interview for you, whether you're considering filing bankruptcy or not. So let's get to the show and let's cue that music.
Welcome to the Fresh Start for Life podcast, the show that will help you get out of debt and start living the financial life of your dreams. Now, here's your host, Don Golden.
Hi, everybody. Don Golden here. You are listening to episode number 5 of the Fresh Start for Life podcast. Thank you so much for tuning in today. We have a great topic today, and we have a pretty long interview with our guest, David Roberts. As I said before, David Roberts is the president of Automotive Fresh Start Center. There's such good information here. Let's just jump right straight to this interview. All right. Right now, I'd like to welcome to the show David Roberts. David, thank you for joining us.
Thanks for having me, Don.
Absolutely. You are a busy guy. I can tell that because this was hard getting you pinned down to get the schedule, but I'm really glad that we were able to have you on today. The big reason why is because I think you and we have the same sort of mission. I think we're cut from the same cloth. We really want to help people, overcome the difficulties of bankruptcy and live a better financial life in general. Before we get into the details of all that, what you do with your business, Automotive Fresh Start Center, I just want the listeners to get a little bit more information about you in general. So tell us a little bit about yourself. Have you always been in the car business?
Don, I've been in the car business longer than I want to say. It'll tell my age. I've been in the car business since 1980. Worked my way up through the ranks and owned part of a dealership at one time. And that dealership, we had started marketing people that were in discharge bankruptcies. And Don, the biggest thing that broke my heart was to see people that were out there and wanted to get a fresh start, but yet they were still $18,000 underwater in their cars, and they were just unable to trade out and to get into a lower interest rate in a better position in life to build their financial freedom. And that's what really prompted me to start doing some research and decided to take the route of getting directly out of the car business and more into helping people overcome those obstacles.
Nice. We spoke a few weeks ago when we were talking about doing this interview. You said something to me during that conversation that really struck a chord with me. Hopefully you don't mind me sharing this, but you told me that you actually hate the car business.
I do, Don.
Can you elaborate on that and explain to me why it is that you hate the car business?
I just don't enjoy the car business. I mean, it's what I've known and what I've grown to know most of my life. And the hardest thing for me was to watch people buy cars for too much money, go through the rigmarole, being beat up and turned over to several different managers, and then get into the finance department and get sold products that they didn't need. It's nice to be in the car business somewhat. And our business is more of a core business of educating our clients like you, working with them through the process. You've referred us several clients over the years, and we appreciate that.
Absolutely. It's my pleasure.
At that point, we're able to get them the best approval we can at that particular time and take the stress off of them during a very stressful time and be able to find a car that would match their approval and their wants and needs and set them up for the next couple of years to slide into a very low interest rate loan, buy a new car. It's just a win-win for us, and it's win-win for our client.
Is it safe to say that one of the things that you didn't like about the traditional car business was the high pressure sales and trying to maximize the commissions at every turn and things like that? Is that kind of what you're talking about?
Yeah, absolutely, Don. The high
Okay.
pressure. Our core business has grown tremendously for one reason, and the reason being that we don't approach this as a sales. We don't hire salespeople. We hire people that understand finance and understand vehicles to a certain extent and know how to select the right vehicle for the client. It's all about making the experience seamless for the client and to make it stress free. Because, you and I both know the stress are going under taking this obligation on. And it's really the best situation for them because they are getting a fresh start.
Dealerships out there have created whole brands around the whole anti no pressure. I mean, that's becoming more and more, not it's not the norm by any stretch of the imagination, but it's becoming more and more prevalent now, the no pressure sales. I think CarMax was one of the first ones that kind of came out and did, kind of the no haggle type pricing type of thing. I hopefully this is something that continues on, because I know one of the worst experiences of my adult life was in a car dealership. I had just graduated from law school and didn't know a lot about anything. I had never bought a new car before, that's for sure. I was in a dealership just trying to trade. I had a lease that I had while I was in law school and I needed to get out of that lease. The lease was terminating. They kept me there all day. It was the day that Mark McGuire and Sammy Sosa were trying for the home run record and things like that. And I just wanted to go home and watch baseball. And I'll tell you what, it was horrible. And here I am, a law school graduate, right? Who should have a little bit of more knowledge or, consumer savvy, but, I was still young. I was only 26, 25, I guess. Boy, I actually gave into that pressure. I wanted to go home and eat and watch baseball, and they would not let me leave that place. It was ridiculous. So I've had a bad taste in my mouth for car dealerships and things like that. I never buy a car at a dealership anymore, really. I do everything online and get my financing approved before I actually get there, and come in with my own financing from a credit union. But not everybody can do that because of their credit score and things like that. So as we go on here, I want to ask you a little bit. I definitely want to dive deep into what you're able to do for people coming out of bankruptcy and everything. But because you have so much experience in this, and I'm hoping that you can provide some tips to my listeners that can avoid the situation that I found myself in, where I was stuck in a dealership and just wanted to go home and watch baseball. So what kind of tips can you give people to avoid that sort of circumstance?
Well, Don, the biggest thing that I would tell your listeners is to do all your research online, because let's face it, that's where most of the business is going, even in the retail, clothing business, what have you, is that online shopping. So do as much research as you can, get your approval online, be leveraged when you walk in that door. You've already selected a vehicle, you know what you want. And there's a lot of dealerships now that are taking that approach to actually deliver the car to you, where you don't have to endure that haggle. So I would upfrontly just tell them, look, I don't want to go through the process. All I want to do, I have my financing in place. I know what car I want. I want you to give me the best price that you can. They have the knowledge now and the technology now to be able to take your VIN number on your miles, your VIN number, and ask you a few questions and gauge your trade-in also. So there's a lot of upfront parts that can be done versus spending 8 hours, 10 hours at the dealership. Because I can tell you, I've seen people be there, get in at 9 o'clock in the morning, still at 10 o'clock at night, they haven't taken delivery of their car.
Yeah, that's terrible. That's terrible. I have a couple other questions for you. I've had a lot of clients over the years that have been in the car business. It's a tough business. There's a lot of turnover. People come and go in dealerships. So, they're in and out of jobs, and sometimes they run into financial difficulties. So I've learned a little bit about financing and things like that from previous clients. And one of the things that one of my clients told me, he was actually a finance guy. He basically told me that the extended warranties are some of the biggest profit centers for dealerships. Is that correct?
They call it the back end sale, and it definitely can be a very good profit center for the dealership. One thing in the state of Florida is that the warranty prices are recorded with the state. You cannot discount a warranty. You cannot charge more for a warranty. The dealership that we use, luckily enough, that we can discount that warranty. So we can actually sell a warranty for a few $100s over cost versus the double profit that the dealerships are making. And extended warranties are good if they're affordable and they can fit into the payment range that you want.
Right.
You want your budget met at, because it does kind of take that worry out.
Well, that was going to be my exact question, was when do you recommend the extended warranty? And you kind of answered that. So basically what I think I heard you say is that at traditional dealerships, is it true that you overpay for that warranty for the most part?
Well, in Florida, you don't overpay for a warranty.
Okay.
The warranty price is recorded with the state and you cannot discount it or charge more for it. Now, in other states where some regulated, yes, they can charge you 3 times their cost of the warranty.
I see. So it's state by
Or
state.
on the other side, they can discount that warranty also, where it's a benefit versus being recorded with the state. But of course, you find more that they're going to charge you 3 times the price, the cost of the warranty versus selling you a warranty for a couple $100s over cost.
Has that always been the case in Florida?
Yeah, Florida has definitely, since I've been in the car business in 1980, it's recorded with the state, and the state protects the consumer on that.
That's good.
But I can promise you that they're still making good money on it.
Right. Somebody that's not in bankruptcy or not, that maybe they have sort of bad credit, but they're not in bankruptcy right now. What kind of credit score does somebody need to traditionally do car lending or to get a traditional car loan? Is there kind of a standard?
Don, there is a lot of the lenders that do not even predicate a car loan on a credit score.
Really?
We have got approvals on consumers that being under 400 credit scores. It just basically depends on, in a lot of the subprime marketing, it depends on stability and ability. If a consumer's been on their job for a long time and they make a good, stable income, and you know what, they've had a hiccup here or there, but they paid for a few car loans prior to maybe possibly having a repossession, that's still a consumer that can get financing.
Are you talking about specifically through you, or because I've had a lot of clients tell me that they've been, they can't get a car. They've given to a dealership and they can't get a car loan. Is this because of the relationships you've built with lenders, or is this kind of standard across the board?
Don, that is depending on how knowledgeable the dealership is. There's a lot of dealerships that really don't want to entertain the subprime market because there's a lot of situations where they're not doing their verifications up front and a contract might have been returned. So they want to get out of it. They don't want anything to do with it. We specialize in it.
Right.
We can help those consumers even if they haven't filed bankruptcy.
You said something about a contract being returned. And, I think this is something that most people don't understand. My understanding, I think I have an understanding of it. So we'll see. I'm going to check. I'm going to check with you and you tell me if I'm right or am I wrong or how I'm wrong. But it's my understanding that when you go to a car dealer, a traditional car dealership, and you apply for a loan, they may come in and say, okay, here you are, you've been approved or whatever, you got this pre-approval, but they haven't necessarily placed that with a lender yet. I've seen this happen multiple times from clients where they leave the dealership and they think they've got a deal in place. They got a loan locked in, they think. And then about a week later, they get a call from the dealer saying, hey, the financing didn't go through. You need to bring the car back. Have you heard of that happening?
That happens every day, Don. Every day in the dealership arena. Yeah. The problem with that is that they're taking an approach of looking at somebody's credit and saying, yes, we can get a loan approval for that.
Right. But they don't have anybody committed. They don't have a committed lender
not
yet.
At all.
Okay.
Absolutely. So they have no committed lender. They're going to shotgun your application around to every lender and try to get it approved. And there's a chance that loan is going to change. If they do have an approval, the rate might be higher. It might require more money down. They're just taking that as a what if. What we think we can get it approved.
Right. The bad part about that is the consumers left the lot with the car thinking they own it, and they're showing it off to their friends. And now they get a call a week later saying they got to bring the car back, or they got to come up with $1,000 down payment, or they got to pay, 5 extra points on the interest rate. And from what I've seen, most people don't want to return that car because they've got an emotional commitment to the vehicle already. So they agree to pay the higher number. To me, that's just another example of, dealerships taking advantage of people that don't really understand the process. And that's what I like about the way you do things.
We make sure that, and there's on the dealerships, taking a little bit of the devil's advocate into it. A lot of times the dealership customer will tell them, I make $2,500 a month. Now, if the dealership was doing their job right, they would ask in the subprime market, they would ask for a paycheck stub, and they would know how to calculate the exact income before they submitted the application.
I see. Not always their fault. They're not always being underhanded. Sometimes it's the consumer that's not providing the right information or inflating. They're puffing a little bit, and the dealerships relying on that puffery to get what they think is an approval, right? So,
right.
Okay. Well, I'm glad you cleared that up for me, because I don't want to falsely accuse all dealerships of being bad. You know what I mean? So I'm really glad that you cleared that up for me.
And you do run into consumers that will be passed on the rent. They tell you they're not, or they don't have a car, and they'll say, okay, I got my car now, and then they quit their job. Well, every one of those subprime loans requires a initial welcome call with the bank, verifications on the backside, which means verifying residence, having a welcome call. A lot of times these consumers will be afraid to answer the phone because, quite frankly, they have creditors chasing after them, Don.
Right.
And they don't do their welcome call to the bank, and then the contract's returned. So it's both sides. And one thing is, we always educate our clients, and we do all verifications up front. We check the work number, and if they're not in the work number, we're going to do the BOE up front. We're going to send it to the employer and have the employer verify how long they've been on the job. We're going to verify they're current on their rent. Knock on wood, Don, we have not taken a car back. It's just, that's the worst feeling to have to, A, as a dealer, endure having to get a car back, and B, putting the consumer in that situation.
Right.
And there's a lot of times the consumers put themselves in this situation by quitting their job prior to their funding. And it's probably good, because if they quit their job, then they probably can't afford the car.
True. Absolutely true. There's another thing that I have always heard, and maybe this is a myth too that you can correct me on. But so I never buy a new car. I always buy slightly used. And so it's because I've heard that, new cars depreciate so quickly as soon as you buy them. Is that true?
Don, I'm going to give you a personal experience.
Great.
I'm in the car business.
Yeah.
And I bought my wife a new Toyota, my daughter a new Toyota, myself a new Acura, all within a couple months. And I bought back of invoice on 1,000 back of invoice on every vehicle.
What does that mean? You said back of invoice? Is that what you said?
That means the dealer pays, say, $12,500 for the vehicle. Now the dealer gets a participation from the manufacturer,
right,
of about 3% to 5%, which is called holdback. So when you're buying back of invoice, you're buying almost to the dealer's net price.
Okay, gotcha.
And you're supposed to be in a good position. Well, Lord and behold, 18 months later, I got to trade all three cars and I'm $5,000 a car upside down.
Wow. So that's probably a true statement then, especially if you're paying retail for the car.
Oh, yeah, even if you're paying under retail.
Yeah.
And the only way I could find out without having to come up with a substantial bit of money and put myself back in that position was to lease new vehicles. I would never recommend. A lot of our clients come to us and want to buy a new vehicle, and we tell them, we'll do whatever you want to do, but it is definitely not in your best interest.
Right.
Buy a slightly pre-owned vehicle, let the previous owner take the big hit of depreciation. You benefit by it. That's
a great tip right there. That's awesome. Thank you. I'm glad to know I had at least one thing right in my understanding. This is a good opportunity for us to talk a little bit about your business, Automotive Fresh Start Center. Can you tell us, what is Automotive Fresh Start Center? What do you do?
Automotive Fresh Start Center was founded 11 years ago, like I mentioned, from people coming in fresh out of a bankruptcy and not getting a true fresh start. So we kind of got together and found some avenues to finance consumers, your clients, prior to discharge, as quickly as a few days after they file their bankruptcy case and surrender their current vehicle. That is what we specialize in.
Are you a finance company, or are you a car dealer, or a combination of both?
We're a combination of both. We work together with a new car dealership, which has the finance agreements for the bank and the inventory. We're kind of the go-between the dealer for the client. We only market with one dealership because the dealership that we market with will not sell a car or provide a vehicle for a consumer that has a bad Carfax.
Oh,
They give every client a 10-year, 1 million mile warranty, 10 years from the original date of delivery at no charge to the consumer.
wow. That's
We
awesome.
feel that that's a valuable tool. And not only, we don't inventory a lot of vehicles, maybe 100, but we have daily access to 47,000 cars. So if your client is looking for a particular car, we go online, we find the car, we check the Carfax, we go through the inspection report with a fine-tune comb. We send pictures to your clients, have them view the pictures. We provide them with a Carfax up front. We go through what we call the proposal, what that would cost them. Most of the time, zero down.
Nice.
And we disclose the selling price, the taxes, the tags, and the payments. If they're comfortable with it, they sign the DocuSign, and we buy the vehicle for them. The vehicle is transported to our new car dealership, and it's inspected because it has to be inspected and certified to qualify for that 1 million mile warranty. And then we deliver right to their front door.
Wow. We got to unpack this. There's a lot there. The first thing that I want to unpack is this is something that could easily be missed by the listeners is that you said you can do this basically as soon as the bankruptcy is filed. It doesn't have to be discharged. Is that what you
correct,
said?
Don.
Okay, that's
absolutely.
So now that's incredible because I don't know anybody else that can do that. Do you have any competitors that are doing this?
We have a few competitors, Don, but I don't mean to toot my horn, but I think we're the best there is out there because we provide a lot of the same things you're providing to your clients.
Exactly. We're going to get into that too in a minute. But so I have not heard of anybody else. I've not heard of anybody else doing this at all. So you're the only, there may be competitors, but they're not doing as good a job of publicizing it because you're the only company that I know that does this. And just so people understand, it's a big deal to be able to get a car loan while your bankruptcy is pending. I know it's a little different for Chapter 7 and Chapter 13. We ran into a problem with that with one of our clients. We referred a client to you that was in a Chapter 13 because we only heard filed. It's a little different for a 13, right? Can you explain that? What the difference between Chapter 7 and Chapter 13?
Chapter 13 is a repayment plan, and that has to be confirmed by the trustee. There has to be an established payment because the banks cannot budget a loan for you if they don't know what your planned payment is to the trustee every month.
Right.
So that's why that has to be confirmed first. Chapter 7, nothing.
Right. So in a Chapter 7, you can do a loan, or you can usually get a loan for somebody as soon as the bankruptcy is filed. But in a Chapter 13, they have to go through the confirmation process, and the plan has to actually be approved by the court so that their monthly payment that they're going to be paying to the trustee is established. And that way the bank knows exactly what their true budget is.
That's correct.
Okay. That makes a lot of sense. I apologize because we did not understand that with one of our referrals.
I remember.
Yeah. So now, I mean, that makes complete sense. And I can understand why the bank would want to do things that way for sure. That's good information. So your business is physically located in Jacksonville, Florida. So do you have inventory on a lot in Jacksonville?
No, Don, we don't. We do not have any inventory at our dealers. Well, I'd say our offices. We do everything via internet. We do have inventory in our North Carolina location. We try to make it as streamlined and as easy as for the clients. The Jacksonville attorneys, I think we have about 15 of them that refer us clients directly. They leave their office and come directly to our office. We sit down. Outside of the pressure of a dealership, outside of the embarrassment of being in a dealership, we sit down and we have private offices, and we talk to them and we view inventory. We actually get their approval right while they're here.
So you're viewing the inventory online, right?
Correct.
Okay. Does the consumer mind not being able to test drive like you would traditionally be able to do at a typical dealership?
Every once in a while, we get a little pushback from it, Don, and we just tell them, this is basically the way the car business, this is the way we run our business.
Yeah.
If they're looking at a Nissan Rogue, swing by your dealership, try the Nissan Rogue.
Right.
Unfortunately, you're not going to be able to buy that car there because they don't do what we do. They have to wait till your discharge.
Right.
And that brings up, a point that, a lot of consumers are programmed to wait till they're discharged. Well, you as an attorney can tell them, you have to reaffirm that car. Once you reaffirm your car, you're stuck with that car, whether you're $10,000 underwater or not. And the probability of trading out is pretty near impossible. And they wait till they're discharged. At that point, they don't know if they can even get a loan being freshly discharged.
If they reaffirm most of the time, they're not going to be able to trade the vehicle in because they're upside down. And then they're just adding all that negative equity to the new purchase.
And they're not getting a fresh start.
Correct.
Like you and I talk about.
Exactly right. I think what you're talking about here is a very good strategy. Basically, the strategy is, in order for a consumer to get a true fresh start, we want them to leave bankruptcy with the least amount of debt they possibly can, which would include their cars. Typically, in most jurisdictions, we're in the 11th Circuit. And in the 11th Circuit, if you want to keep your vehicle, you have to reaffirm it. Reaffirm basically means you sign an agreement saying that the debt is going to survive the bankruptcy and that you're going to continue to pay for that vehicle after your bankruptcy is discharged. And it's required if you want to keep that vehicle. Now, what David and his company is offering is the ability to get out of that car loan while the bankruptcy is pending and buy a new car, or not a new car, but a new car to you, a slightly used car, while your bankruptcy is still pending, so that you don't have to reaffirm that debt. You can surrender that vehicle to the lender and get out of that debt that you're upside down on, get into a better loan, hopefully, at least one that you're not upside down, you have negative equity on, and truly get a fresh start, because now you have a car loan that you can hopefully afford that's not upside down, meaning you don't owe more than it's worth. You owe what it's worth now, and you're in a much better position. Am I summarizing that strategy correctly?
Absolutely, Don. And we're very transparent with our clients. With a zero down loan, they are going to be underwater.
Oh, okay.
Because they're not paying their taxes and tags and fees upside down.
So it's not just zero down. You're not talking about just a zero down payment. You're saying walk out the door with no money at all?
Sign and drive.
Wow. Okay. Well, then that's there. I assume they would have to pay tax, tag, and title even with $0 down. That's interesting. Okay. And what percentage of the loans are your deals that type of deal?
I would say 99% of our loans are zero down.
Wow. Okay.
And my banks do not require down payment. The only time we require down payment is when you go out of a specialized vehicle, which they call their select vehicles, and it might be a domestic vehicle, and it might require down payment because of the loan to value. It's not within the guidelines of the bank. Don, I'll be honest with you, I can't remember the last time we got a down payment.
Wow. Okay. That's a good information. The important thing to know here, though, is that even though you might be upside down, I mean, typically I see people $10,000, $15,000 upside down on a car, and they feel like they can't give it up because they say, well, I need a car to get to work. And what you're offering them is the ability to get a car that will get them to and from work and only be a little bit upside down if they don't put any money down, which is typical, I guess, for somebody coming out of bankruptcy. They don't have any money. So I guess that's typical. But they're definitely, I would believe they're going to be less upside down than they were in their other vehicle, either way.
Oh, absolutely, without a question.
Yeah.
And our strategy, and it's kind of quirky, I'd say, but our strategy is there's two ways you got to look at it. Either they want to date a car for a couple of years, get the credit score up, and get into a different vehicle at a lower interest rate,
right?
Or they want to marry that car, and 2 years, 3 years from now, with your program, my program together, refinance that car.
I'm working on I have the Rebuild Your Credit, Rebuild Your Life course, but I'm working on a second course right now. That is a budget and, just a budgeting course and a course on how to live a better financial life. And I actually am teaching how to live your life with no car payment at some point. It doesn't happen overnight, but, eventually that's where we'd like people to get to, where they don't have to do any financing and they can just walk in and pay cash for a vehicle. And I know that's hard for a lot of people to think about when they're in a bankruptcy situation. But there's absolutely a way to do it. And I love teaching people how they can possibly do that in the future. I look forward to that course coming out. How is it that you're able to do this exactly? You mentioned that, most dealerships won't deal with it. How is it that you're able to do this?
Don, we rely solely on our attorneys to refer business to us. And, it's a win-win situation because there's a lot of people out there that are probably not going to file for the reason they're fearful of what are they going to do about a car. So we're trying to provide that situation for them. We start from the beginning. Once we get an application, we do our verifications, we process the loan, we move to vehicle selection for the client. They pick out the car they want. And this is what I'm probably most proud of, and it really makes me feel good inside, Don, is once they've got that vehicle and they picked it out, and I can go to the bank and say, this is a car they want to buy, I renegotiate their interest rate for them. And there's a lot of times we have a consumer that'll sign a proposal, say for $450 a month, and we'll call them back, hey, great news, we got your payment down to $425 by negotiating.
What kind of interest rate are they usually looking at? I know it's going to vary, but across the board. But if you could give me an idea, what kind of interest rates that most people are getting on these types of loans, that would be great.
We have got anywhere between 12 to 17.99. If I had to say a mid-range, and it's all based on their past performance. The banks love a situational bankruptcy. And when I say situation, that means that somebody that had really good credit, paid for car loans, 2 or 3 good car loans, and something happened, medical condition, lost a job, couldn't manage the credit cards properly, but they had some good car credit. Those are consumers that we get anywhere between 12 to 14%. Now, I know that sounds high, but there is a company, which is, I won't mention a name, which is well known, does a lot of advertising, delivers cars directly to your house. And we had a fresh discharge customer, and they asked the customer for $8,000 down.
Wow.
And 22% interest.
Wow.
We were able to get the customer the same car with 0 down and 13.99% interest rate.
That's awesome. Like you said, that this to some people, this may sound high and high interest rate, but if you compare it to what a lot of people have to do, which is go to a buy here, pay here, or something like that, those interest rates are astronomical, right?
They're anywhere between, I think Florida allows up to 28.95% interest rate.
Wow. A lot of people may not understand what a buy here, pay here is. Can you explain that? You and I know what it is, but if you could explain it for the listeners, that'd be great.
Yeah, buy here, pay here is the traditional buy here, pay here was when the buy here, pay here company would buy a car for $1,500 and they would require $1,500 down. So they own their inventory free and clear, and they would charge you $6,500 for that car. And on top of that car, they charge you 28% interest.
With weekly payments or
bi-weekly, which most consumers don't realize there's some months that you're going to make 3 car payments.
Right, exactly.
That's the part of the car business that I don't like at all.
Right.
I just feel that it's taken advantage of somebody's need. And that's why we want to try to help anybody in that type of situation before they have to go there. There is a couple buy here, pay here lots that'll do consumers in bankruptcy, but at 29% interest, 28.95% interest, and 5 times what the car's worth.
Definitely not good deals for the consumer for sure. And there's also some, I don't know that they all report to credit reporting bureaus. Is that right?
No.
Yeah.
Most of them do not. The only time they seem to want to report is when you don't pay them and they repossess the vehicle. Then mysteriously they report.
That's interesting. Just so the listeners understand, you want to make sure that the car loan that you get into after you file bankruptcy is going to report to the credit reporting bureau, because you want this to help you reestablish credit. It's going to be as long as you make your payment on time, it's going to be something that helps you increase your credit score over time. So you definitely want to make sure. Yeah. So it's important to check that out when you're buying another vehicle after a bankruptcy. What kind of quality cars are we talking about here? That's another thing that I think a lot of people worry about when I start talking to them about this program. They're worried that they're not very good quality cars and stuff. So what kind of quality car can somebody expect to get?
Our inventory, Don, is we try to really heavily leverage our clients with imports. Most of our vehicles are 16 to 2018s. All of them have a 10-year, 1 million mile warranty. They have a clean Carfax. They're completely inspected. If they need tires, they need brakes, it's done. We're representing the car through a new car dealership. And part of the agreement a new car dealership signs with us is the expectations of the car for our clients. We value our reputation. And obviously, if any of your consumers check us out, which we ask them, please read our website. Please check us out on Google, Better Business Bureau, Facebook. We're 4.9, 4.8. And we're not talking 5 reviews. We're talking hundreds of reviews.
Right. That's awesome. I know that you don't just work with people in Florida, right? I know you have a lot of Florida attorneys that refer you business, but you're able to work with other people other than people in Florida, correct?
Oh, definitely, Don. We deliver cars to Mississippi, probably 7, 8 cars a month.
Wow.
Tennessee, we probably deliver 20 cars a month to. Texas. The only place we haven't ventured yet, and financially, I don't think it's good for the client, is California and Oregon. That far away.
Probably not.
We do have
I would assume Alaska and Hawaii would be difficult too.
No, we don't do those. But we just we do some deliveries in Idaho. So we're very flexible. We have a complete professional driving staff. We knock on wood. If we've had a small issue on a car when it's been delivered, we correct it immediately.
Is there any sort of, the consumer's buying the car sight unseen? Is there any sort of 30-day policy or, 14-day or anything like that where if they're not satisfied, there's a return or anything like that?
No, Don, we don't offer that. But
Okay.
I can promise you one thing is that if we're going to endure $1,000 delivery expense, that car is going to be perfect.
Right. It's going to be what they expected.
That car is going to be what they expected. Because the last thing we want to do, and knock on wood, it has never happened to us, is deliver a car to a client and they're not happy with it and they send it back. We can't make anybody sign a contract. So, that's just, if they're not happy with a car, we just ask them not to sign the contract and send the car back.
Well, they're doing the contract. They sign the contract online, right? Isn't it DocuSign? You said they're signing the contract?
They sign the proposal DocuSign, but we actually take the original documentation to the client where they can sit at the ease of their own house and read it.
Okay, great. That's great. What kind of documentation does a debtor need in order to proceed with a loan with you?
The most important thing that we need is a current paycheck stub.
Okay.
A good credit application, which means a complete job history, complete residence history. The documentation is normally a phone bill, electric bill, 6 references, and a paycheck stub, driver's license, and full coverage insurance.
That's not too bad.
Some of the places you feel like they're asking for DNA, but we're not that way.
I mean, to be honest with you, we have to get a lot more than that for people filing bankruptcy cases. So
absolutely,
they're used to getting documentation together already anyway. You alluded to this before, and I want you to elaborate on this a little bit. And so other than financing vehicles and things like that, how else do you help consumers recover from bankruptcy?
Well, Don, the most important thing is that, correct me if I'm wrong, normal discharge takes normally around 4 to 5 months. Is that correct?
It's about 90 days if everything goes right from the date of filing.
Okay. If a consumer was to take delivery of a car a few days after their bankruptcy, they're already establishing car credit before they're even discharged. We have a lot of attorneys that will send us clients a week before they file, and we get all the legwork done. So the day they file, they're already approved and ready to go. So that's something that we just offered to our platform.
Okay. So you're helping them reestablish their credit by getting them into a car loan quickly that they will be paying on. And before their case is even discharged, they're going to have a positive trade line on their credit report.
Correct. And we always ask our clients, every 6 months to send us their free credit report and spend a little bit of time with us and kind of review that and kind of strategize what the best course of action is. We're not consumer credit counseling or anything or credit education, but we know credit well enough that we can give advice.
Interesting. So You want to review the consumer's credit report with them to help them identify anything that may be inaccurate or anything like that? Is that the service you're sort of offering?
And to make sure we definitely do that. Definitely want to help them manage that credit. And the one thing is, at that point, we every 6 months we can look at their scores and say, hey, now's the time, Mr. Consumer, that you might want to entertain getting out of that high interest rate loan, or it's really not that high when you consider it's half of what most people are charging. But let's get you down in that 3, 4, 5% interest rate.
That's what people are looking for. They want that. They want to pay the least amount as possible, obviously, and that's.
Oh, absolutely.
It only makes sense, right? You only want to have to spend what you have to spend on a car, and so that's great.
Absolutely, and at points we've seen our consumers drop their payments $100 a month.
So the important thing here, the lesson here, is basically that bankruptcy isn't a death sentence, really, when it comes to credit. That you can recover, and you can actually recover fairly quickly. And you said like 6 months later, you sometimes can help people get better interest rates.
That's a case by case.
Right.
We've got lucky enough to have several consumers out of the 3,000 cars that we've delivered. We've maybe had 4 or 5 people that fast, but numerous right at that 2-year mark.
Okay, gotcha. That makes sense. Before you got into this business, and when you were a traditional car business, did you ever meet a consumer that you basically really couldn't get financing for, and really the circumstances, they would be better off filing bankruptcy and getting a discharge because it's easier after they file bankruptcy sometimes to get car loans? Is that true?
That is absolutely true. The traditional subprime lender looks at post-discharge as a high-risk loan. They look at people that are struggling as a high-risk loan, and they put them into that category where they might not approve them, where the lenders we use understand what's going on. They understand bankruptcy. That's why we always have a lot of our consumers, or not a lot, a handful, that'll say, I'm just going to wait till I'm discharged. Well, Mr. Consumer, that's probably not a good idea, because then you're going to go into a pool of lenders that don't understand bankruptcy, that puts you in a high-risk lending situation where if you were in bankruptcy, our banks understand bankruptcy, and they can look at your past credit and say, hey, this consumer paid good at one time in their life. They had a situation come up. Now they're going to be debt-free, other than maybe a mortgage and a car payment, and they're willing to loan that money.
And they can't file bankruptcy again for 8 years, at least 8 years to get a discharge. So that to me, that makes them a good credit risk. But you just said something that I don't think, it took me a minute to catch it, and I hope everybody else caught this too. What you just said is that the standard for people that are struggling before bankruptcy and the standard for people that have been discharged in bankruptcy is almost the same. It's harder to get loans during that time period. And it's easier, is what I think I heard you say. It's easier to get a car loan while you're in bankruptcy. Did I hear that correctly?
That is absolutely true.
Wow. That's mind-blowing.
Yes, it is. Because they want to put you in that high-risk category, not knowing that, hey, guess what? This consumer just went through a traumatic time in their life. They're debt-free. They can't file for another 8 years. And let's face it, Don, 75% of the people that go into bankruptcy really want to straighten their credit out and want to get financial freedom.
Right. Absolutely.
And this is their opportunity to do it. And that's what we're about. And I know that's what you're about.
That's great. This was really good, David. I really appreciate all the great information you gave to us today. How can people learn more about your business and what it is that you guys do and get a hold of you if they're interested in talking to you about buying a car?
Don, they can call us at 800-848-5830. And we always want our customers, always, without a doubt, want them to visit our website. And we ask our consumer, please do us one favor. Before you do business with us, and I don't think anybody else says this, please read our reviews. Please look at our website. Listen to our podcast. Read the book that I wrote that's online that they can download at no charge. Check the Better Business Bureau. Go through all those avenues and make sure we're the right fit for you. Because quite frankly, if a consumer's not interested in building their credit and all they want to do is buy a car, there's plenty of dealerships to do that. We're not the right fit. You know, we're compassionate. We want to see our people grow that credit score, have that financial freedom, just as you do.
That's why I like referring my clients to you. What's that website? I don't think we heard you. I didn't hear you say the website. What's the web address?
No, it is automotivefreshstartcenter.com or automotivefsc.com.
That's great.
You can like us on Facebook. You can follow us on Facebook. There is a lot of good information. We post you up there all the time, Don.
I've noticed that. I appreciate it. I appreciate you sharing some of my posts. I definitely appreciate that.
And we have a lot of educational information on our website also. And we have a lot of educational information every Wednesday. We have Wisdom Wednesday on our Facebook. We're going to get you to do that, Don.
I'd be honored to do it. That's what I love, though. That's what I really like. And that's why I think we are peas in a pod. You know, we have a passion for educating people about living a better financial life. Let's help people recover from this and help them transform their life and live a better life, you know, and I love that you're helping people do that. It's not every day you find a car dealership or, you know, somebody that's in the automotive business that is involved in changing people's lives like you are. I just love it.
Well, I appreciate the opportunity to serve your clients.
We'll put all that information in our show notes, the website and the telephone number, and we'll give people plenty of opportunity to reach out to you. David, thank you so much for this interview. It was great. I really appreciate it.
Don, thank you for giving me the opportunity.
Wow, that was some really good information. Hopefully you got a lot out of that interview. I know I got a lot out of it. So I want to jump right to my big 3 takeaways from this interview. The first one is that if you are considering filing bankruptcy, surrendering a vehicle that you can't afford and you're upside down on, meaning you owe more than it's worth, is a great idea. Go ahead and take advantage of that fresh start. Let's get rid of as much debt as possible when you're filing bankruptcy. And then turn to somebody like David Roberts and the Automotive Fresh Start Center to replace that vehicle. The second big thing is that I am glad to hear that warranties are, in fact, regulated in the state of Florida. I always had a bad taste in my mouth for warranties. I'd heard a lot of negative things about warranties. I'm glad that David was able to clear that up. It appears that based on the information David provided, warranties aren't as bad as I thought they were, and maybe there is value there. So do your homework, check into it, make sure that the warranty is something that you need if you decide to buy a warranty when you are buying a new vehicle. It does add a fair amount to the cost of the vehicle, so just weigh that in. But I'm glad to learn that there's not as big a markup as I thought there was on the warranties, and that they are in fact regulated. And the biggest thing, number 3, and the biggest thing is don't buy a new car. This is something that I've always kind of thought it was true, and David definitely confirmed it. The depreciation of a new car is simply not worth it. You are putting yourself in a position to lose when you buy a new vehicle. When I buy a car, I'm always looking for something that's 2 to 3 years old, and to me, that's the sweet spot. Let somebody else pay for that depreciation, and let's not put ourselves in a negative situation when we buy a vehicle. Doing things like buying used vehicles is the way we can win financially. Well, that's going to pretty much do it for today's episode. I hope you enjoyed it. Now, I know I ask you this every single week, but here again, I'm going to ask you to please subscribe to the podcast. And if you could, even more importantly than subscribing, or maybe equally as important, is please leave us a review. I'm really looking to increase the number of reviews we have, hopefully providing some good value to you. Hopefully you're enjoying the podcast and you're willing to leave us a review. And also, if you have anything you want to say about this particular episode, I'd love it if you'd leave us a comment on the website. That'd be fantastic. The comment section is open. So if you have something you want to contribute or you want to ask or anything, just go ahead and leave a comment and we'll be sure to respond to that. And lastly, if you are finding yourself in a position where you need to find out more about bankruptcy, please go to our website, freebkbook.com, and request a copy of our book. As you know, I've written a book called Bankruptcy in Florida, Your Freedom, Your Future. If you live in Florida, we'll send you a copy of that book for free. If you're not in Florida, we have a really good report on bankruptcy that we will provide to you to download. And like I said in the last episode, we may also have a partner law firm that has written a book that we can provide to you if you're in an area where we have partnered with another attorney. But either way, you're going to get either a copy of a bankruptcy book or a free bankruptcy report. So check us out at freebkbook.com and go ahead and subscribe to the podcast and leave us a review. See ya in the next episode.